All right, Accounting 2 kiddos, welcome to our Work Together 6-2, where we will be estimating our uncollectible accounts expense a few different ways, and then also journalizing a few transactions as well. So let's open up our instructions to get a look at what we need to accomplish. It says, general journals and a cash receipt journal are provided for us, and we're going to start with number 1 first, which says Lycum Inc. had net sales of $642,453.29 during the current year, which ended on December 31st. The company estimates that the amount of uncollectible accounts expense is equal to 0.8% of net sales, and we're going to record the adjusting entry for uncollectible accounts expense on December 31st. So if you are going to do the estimate of uncollectible accounts this way as a percentage of your net sales, you can do that as we described in the lecture. So let's do that transaction first. So remember when we're doing the adjustment for uncollectible accounts expense, what that looks like here in our general journal is we're going to put our date in, which is of course December 31st. And our two accounts that we have are our uncollectible accounts expense, and our credit goes to that allowance for uncollectible accounts expense, which remember is the contra account to accounts receivable. Okay, so this actually reduces the balance of accounts receivable, which means that it has a normal credit balance. Okay, since accounts receivable has a debit balance, if it's contra, it has to be opposite, so allowance for uncollectible accounts is a credit balance. So in order to find the amount of our adjustment, what we're going to do here is we are going to take our net sales amount, which is $642,453.29, and take that times 0.8%. So if you're going to turn that into a decimal, make sure you do it correctly. It's 0.008. And when you do that calculation, this net sales times 0.008, what you end up with is $5,139.63. And that is the amount of our adjustment when we do the estimate of net sales method, which is what we just did. Okay, so that's one way to journalize our adjusting entry. Okay, so that's part 1 right there. Coming down here to our aging of accounts receivable, we'll look at our instructions one more time. It says in step 2, we're going to do the aging of accounts receivable for a company called Rollins Inc. as of December 31st of the current year. And the estimated percentages for these uncollectible accounts by age group are given to us, which is this little diagram right here. We're going to calculate the estimated balance for the allowance for uncollectible accounts, and then we're going to record the adjusting entry. It also gives us the balance of the uncollectible accounts on December 31st before we've done adjusting entries. So let's go back to our work together here and start looking at our aging of accounts receivable. So remember, we break it down as this $32,154.62. That's current right now. That means that those are all of our people that are have not gone past due. We believe 3% of that is going to be uncollectible. So we just take the amount times 3%, and we get an amount we believed to be uncollectible is $964.64. And then we just go on to our next group. 1 to 30 is 1 to 30 days past due. We have $14,178.96 that it is in that category, and we believe 6% of that's going to be uncollected. So that is $850.74. Then we go to 31 to 60 days past due. Our amount is $5,148.61. We believe 10% of that is going to be uncollectible. So that brings us to $514.86. 61 to 90 is between 3 months past due. We've got 3,200 about, and we believe 20% of that's uncollectible. So when we do that, we get a balance of $643.02. And our last one is over 90 or over 3 months past due. We believe 50% of that's uncollectible. So we have $921.03. Now, just as I mentioned in the lecture, note that typically as we get farther and farther past due, our percentages get bigger because we believe that those accounts are eventually going to be uncollectible. So of the $56,539.35 that people owe us currently, we are going to add up all of our 5 numbers here to get the amount we believe to be uncollectible, which is $3,894.29. So that's what we believe our uncollectible accounts balance will be in our allowance for uncollectible accounts at the end of the year. However, we're currently sitting with a balance in our uncollectible accounts expense. And let's look at what that is, because this is a little tricky. Please note that it says that the balance of the allowance for uncollectible accounts before adjusting entries, which we haven't done adjusting entries yet, is $148.68 debit. Remember that the allowance for uncollectible accounts is going to have a credit balance. So what we need to do when we enter this amount in here is we need to put it in parentheses to indicate that it is technically a negative number. Okay, so we put 148.69. Is it not going to let me put parentheses around it? Well, that is just, can I put a negative in front of it? There we go. Okay, so you need to put a negative sign in front of the 148.69 in order to get parentheses. That signifies to us that's a debit, because if we had a positive number here, what you would do is you'd end up taking the difference between these two or adding them together, and that's not what we need to have happen here in order to get our estimated addition to our allowance account. So technically, what we need to do is, if you imagine that you had a T account right here, I don't have a T account, but imagine that you had $3,894.29 and you have a debit of $148.69. Technically, we need to add those two numbers together in order to get our account balance. Because if you had a credit and a credit, you would take the difference between those, which would be subtracting. So technically, we need to add here in order to get our updated balance. So when we do that, we take $3,894 plus our $148.69 debit. We come to $4,042.97. Okay. And so this is our estimate. This is our adjustment right here. So it technically says in our instructions that we're going to record the adjusting entry, which is what this general journal is for here, just doing it a different way. We did the net sales method before. This is the aging of accounts receivable method. Regardless of the method you use, your accounts are still the same. So we still put December 31st here, and it's still going to be uncollectible accounts expense, and our credit is still going to go to the allowance for uncollectible accounts. However, our adjustment amount is this $4,042.97 that we just found. So that's what goes in here, $4,042.97 and $4,042.97. Okay. So that's step 2, doing an allowance, an aging of accounts receivable method. And then we're just going to go back. We're going to review a little bit of what we did yesterday, which is journalizing a few transactions. It says on January 6th, we wrote off Marcia Ayers, that's a weird name, past due account as uncollectible for 6/21/23, memorandum number 25. So this person, Marcia, has gone past the point where past the 3 months or so, and we believe that to be uncollectible. We're not going to receive that money, so we're going to write her off. So what we do is in our general journal, we put January 6th. Our account title, remember, is our allowance for uncollectible accounts. Our document number is M225, and our amount was that 6/21/23. And then remember, we have to take it out of our accounts receivable for Marcia, 6/21/23. So this transaction says to us that Marcia didn't pay us. We don't believe that Marcia is ever going to pay us. However, sometimes certain things happen, and as it says on April 14th, we received cash in full payment on Marcia Ayers' account, which was previously written off as uncollectible. Notice that we have 2 source documents, so that's a good indicator that we need 2 transactions. Our first one, remember, is that we need to reopen Marcia's account, because right now Marsha's account has a zero balance in it, so we can't receive any money from her without it having a balance. So we have to reopen Marsha's account. So that's going to go in our general journal first. So we put April 14th in here. And essentially it's just reversing the transaction that we had just done. M259, same amount, 621.23. Oops. And we credit our allowance for uncollectible accounts. Oops. And we put that back in there. And then the last thing that we have to do for this one is record the actual receipt of cash, which is going to go in our cash receipts journal. So now that Marsha has a balance in her account, you can see accounts receivable has been debited. Now we can go and credit it out with our cash receipts journal. So we put the same date because it happens on the same date. All we need to put here is Marsha's name, and then it's receipt number 630. And we go over to our accounts receivable credit, same amount of that 621.23, and then we just put our cash debit as 621.23. And so this shows that Marsha has paid us. Her account will go back to a zero balance, but it'll be because she paid us and not because we wrote off her account. So those are our 3 steps for this 6-2 assignment. So you can head over and do your on your own as well as your application problem.